we're looking at a form that is, I think, one of the more complex forms. It's not a very long form, but it's covers most of the aspects of international tax law. And so we're going to go through the form and highlight those points where it takes some extra work. So this form, 1040-NR, is used by non-resident aliens and also used by foreign trusts. And some foreign trusts are not grantor trusts, they're non-grantor trusts. And instead of filing a Form 1041 as a domestic trust, they file the Form 1040-NR. And so it's kind of odd because you think on the, where it says your name up here, it would be a name for a trust, right? And I can only assure you this causes tremendous amount of chaos when you're having a foreign trust filing a Form 1040-NR or a foreign estate, as you see here with this box. Even though you check the box, it's not going to work well with the computer. So, but you have to do it anyway. Residents of Canada or Mexico, they have a special arrangement with the United States. They've had it for a long time. Married residents of South Korea, another special arrangement. Other single non-residents, other married non-residents. So that's the filing status. And the filing status is an art form with this form, with this tax law, because the filing status doesn't always have any determination on the amount of tax. And you want to think about the filing status because there's other implications such as gift tax and estate tax. Because a non-resident alien, estate tax exemption is not $5 million plus like it is for an American or a resident alien. It is only $60,000, and that is diluted by his worldwide or her worldwide net worth. So anyway, on to this form. So the first part's pretty straightforward. We know about exemptions, and now it gets hard. Income effectively connected with a U.S. trade or business. Unfortunately, that is a very complex tax law, and there's a lot of parts that are complex. One is the concept of business income versus investment income. Then effectively connected with the United States is in itself a complex tax law. So what if we first start with effectively connected? And that would mean that the person has either a office here, if it's like a manufacturing self-employed, has an office here. If it's a person providing a service, they are providing the services here, but providing services here does not necessarily make it effectively connected. It does make it U.S. source, but it does not make it effectively connected with a business, because you could be in the United States providing a service such as you're a banker with a UK bank, with a bank based out of London, and you come to the United States to meet your clients, I don't know, once a month for a week. So at the end of the year, you have 12 weeks of work in the United States. That would mean that 1/12 of your income would be U.S. source income, even though you were being paid by a bank in England. That would not show up on this part of the return. It would probably show up someplace else. But I have to tell you, it's not clear, and it does give you some planning opportunities as to which is ever best for your client. Taxable interest. That's not taxable interest. It's taxable interest effectively connected with the business. So it's not interest just off a bank account if you don't have a business. Same with dividend income. This dividend income connected with your business. Now the income on this page comes down to the net income down here, and it's taxed just as we have on the 1040. It's on the brackets that are graduated. We'll see on the next page where dividend income is generally taxed at 30%. So all these things have to tie into the business. So just by themselves, they don't necessarily go here. Form 1042 we talked about, the Form 1042S. The theory is with the Form 1042S, if the foreign person gets a Form 1042S, he's not required to file the Form 1040. The Form 1042S has all the tax that is required to be withheld, and that's why the W-8 is so important to get correct. Education expenses, these are, once again, the income has to relate back to this income effectively connected with a U.S. business. So a lot of these things, no, they don't necessarily make sense, and they're not going to apply that often with a non-resident alien. Don't forget, this is the non-resident alien. So that means he's not here more than the average of 120 days over the last 3 years, or 180 184 days or 185 days in the current year. Itemized deductions, same thing. These are related to the effectively connected foreign tax credit. If the person's paying tax, let's say in Mexico, on this income, he gets a foreign tax credit here. Other taxes, self-employment tax, just like us, and these are things we've all seen before. 1042 goes right in here, so sometimes the amount of tax withheld in 1042 is excessive, or the long tax withheld. We're going to get to that on the next page. So on the next page, oh, not the next page. This is itemized deduction, the page after next. The next page is where we have the income that's taxed at the gross amount. So back to the dividend income. If a dividend came out of a corporation and if the non-resident alien did not live in a treaty company, the withholding tax rate's 30%. If by chance there was a mistake and it was really income effectively connected with the business, the income wouldn't go here. The withholding tax, the income would go back on page 1, and the amount of tax withheld would have gone on page 2 where you list the Form 1042S tax withheld. So these are the items of income to a foreign person, in this case a foreign individual, income not effectively connected with a traded business. So it's the investor, somebody who is pure investor. There's interest income, dividends from a foreign corporation. A foreign corporation does have U.S. source dividend income if they're engaged in a U.S. business. Pension income, Social Security, things that are what we call fixed and determinable income. Capital gains and losses. Usually a foreign person does not pay tax on capital gains, or of course not on tax losses either. There are two exceptions. One, when the capital gain is connected with the business on page 1, and 2, when it involves a U.S. real property interest, and we see that right here on this form. U.S. property interest, and we probably have all see that in the escrows now. They ask us if we're involved with the real property. And if there is a foreign person selling real property, then there's tax withheld at both the federal level and the state level. I'm sure we've all seen that, and we've seen the forms in our own dealings. And then this is information to help the IRS determine the classification of the person. This will be important for tax treaty classification. National is an interesting concept. We don't too often have that in the United States. They do in other countries. That would mean that he's a tax resident of one nation, and he could be really a citizen of one country and a national of a different country. And that's why the IRS here has countries or countries. Well, are you a resident for tax purposes? That's important when you're claiming yourself not a resident in the United States. The IRS is going to think about that. If you ever applied for a green card, were you ever a citizen, of course? So they were looking for the long-term resident who's left the country. Have you had visas? They're trying to get into your status for income taxes. Have you changed your visa to non-immigration status? These things can go to the immigration department. So when you come into the country next time, it will have a consequence. People working from Canada and Mexico, once again, special laws. And then the days in the United States, of course, they're looking for a determination on whether or not you are a U.S. resident. That's why they go back for the 3 years in your so there's a year test, as you probably all know, and there's also a green card test. If income tax in prior years, now they come down to the trust. So if you're filing for a trust, that would be a foreign trust. And they, of course, have all types of stuff going on. Want to be sure it's not a grantor trust. If you receive money from a U.S. person, that's a big clue to them that it's grantor trust unless the person's deceased. This is nice. This is interesting. Here the IRS is helping you with tax planning. You can actually use the alternative method for any amount. They want to know if you're using the alternative method. So when you're receiving income for services, the general rule is your tax where you're located when you provide the service. There are some exceptions, and those exceptions are very esoteric. The key to paying less tax on your U.S. source service income is great record keeping, and you want to, of course, pass that on to the client. Income exempt from tax, that has to do with tax treaty, and there's a tremendous amount of differences between tax treaties. And so when you get somebody from the United Kingdom, you want to pull out the United Kingdom tax treaty. You don't want to rely upon what you read in maybe a French or Canadian tax treaty. Each treaty is substantially different. Subject to tax in the foreign country. That's interesting. That's kind of like the question above. They really want to know if you're a resident in a foreign country, or if the individual is one of those people that travels from nation to nation and is not a tax resident in any one country. And that's the goal of many non-Americans. They don't spend more than 6 months in any one country. So this is the main part of the form. But every line has its own little bit of nuance, and the instructions are very good. If we can get to a nice page on the instructions, it's a special page. It's not the instructions. So this is up here. This is the government tax map. You can see the URL up here. I use this a lot. So for example, I wanted to look up the alternative method for this video. I put in the alternative method, and they have it as a tip. This is a tax planning tip. So you're not going to get the tax planning tip in the instructions to the Form 1040-NR. You get the tax planning tip in this URL, and this is a great URL just to keep in mind to search with. So now we're open to some questions, and just keep in mind that this is one of the more, more complicated forms. So when somebody comes into your office, you want to be sure that you have really allocated enough time to do a complete job, because when it gets involved with the treaty especially, the time would be substantial.